Wealthy Experts, where we are bringing on experts in their field to help us build effectively a wealthy life. Welcome, everybody, to another Wealthy Experts podcast, where we are talking to industry experts to find out ways that we can build a wealthier life. Today, I'm sitting with Conrad Song, the founder of Maqro Capital. Now, Conrad, I want to say thank you very much for making time to catch up with us today. I've watched you on many other TV shows, giving your advice and specialty advice about different stock picks, what's happening in the market. And in a not so short period of time, you've built a very significant business. So I appreciate you cutting out half an hour for us today.
No, thanks for having me. That's awesome. Yeah, what do you want to know?
Everything, what's the hot stock picks and everything else, how you built the business. I think I want to start today with, how have you landed where you are today? Like, how did you get to starting this business and making it rise to where it is today?
Okay. So I started pretty young, and that's why I'm still relatively young. So I started this company when I was 23. But I guess my journey into finance all began. I was really young when I sort of first got into stocks. So back in the day when Investopedia was everything, I was like 16, 15. And so I was in high school, and I was just looking up, how to get involved into the stock market. And I don't know, it was kind of, I had no idea what the stock market was as a concept, really. But something drew me to it. I think it was, maybe a combination of the fact that it felt like it was a bit of a game, being on the screens with all the charts and everything like that. And obviously the sort of glamorization with all the money involved in it, I suppose, at a young age. But no, I first studied law. Well, actually, I went to a health science high school up in Queensland, and then I studied law for like 3 years before I then went to Singapore for an internship in this private equity firm. And so I landed that opportunity just kind of out of the blue, and I remember kind of just it was a Christmas party actually, and I remember being invited to the CEO's Christmas party, and it was this, pretty awesome. I mean, Singapore's got a lot of money there, right? So it's a pretty awesome house, and there was a chandelier in his house, and I don't know. I suppose when I came back from that internship, which was about 4 months, I thought, you know what? Like, no, I've always wanted to be in finance. I've always had sort of an interest in trading. I'm just going to make the leap. I did law because I liked business, and I liked business because of my old man. And then I think, it was like, well, the business of money, or the business of, what I think I'm a little bit more passionate about or excited about, which then led me to make a move to Sydney. So I dropped out of law, and then I transferred to the University of Sydney, and I studied economics and finance. And that's where, as a uni student, I needed to get a job. And so then I got a job at a company called MoneyMe, which you may have heard of. They listed recently, and they've kicked some goals in the credit space. So I worked there for a short period of time, and that was probably my first exposure to a startup environment. And I think that was really important for, I guess, the point of the story. But then I transitioned to sort of this equities research and stockbroking firm. So 6 months after MoneyMe, I got another job into a pathway that I thought was a little bit more relevant to me outside of credit, right? But I needed money. I mean, I was a uni student. I tried to start, and believe it or not, when I was in uni at Sydney, I tried to start a Bitcoin trading platform, and I remember going to just to go off track a little bit, but I went to I took an elective in computer science just so I could find developers, and I managed to find 2-3 guys, and I had an apartment with a mattress, and that was it. And we were just working on trying to create this Bitcoin trading platform, which, had I stuck to my guns, maybe I wouldn't be here speaking with you. I'd be on a jet somewhere. But I was in front of a screen, and I remember Bitcoin trading at like $400, $300. something like that, something ridiculous. And so, hence why I don't like crypto as a story. But anyways, but yeah. So then I was working because the business didn't sort of go as planned, and I put some money into that at a really young age, and so I needed to make money. I needed to survive, to pay rent, and so then I landed this job at this stockbroking company, and I was really good. I was just really good at it. You know, Not to toot my own horn or anything, but I picked it up pretty quickly. I picked up the ability to communicate to clients about strategies, risks, in a transparent way, right? Which I think is something that a lot of movies have kind of you know downplayed as a focus. But I was really good at establishing relationships with clients, and for them to understand the logic that I had to make an investment to a stock. Um, all the while, I was really just leveraging off a research team. I had a lot of interest and passion, and obviously I studied the stuff, and I did an internship in private equity. So I knew all the fundamentals, but I think there's a big difference between research analysis and stock trading. And so, anyways, I was leveraging off this research team with a bunch of really smart people. So I knew that was an important thing, and so I studied what they tell me to do, or their opinion, embody that into my own logic. And then as I succeeded in that role, I mean, funny enough, the CEO at the time had left and branched off to start his own hedge fund. And like I said, I was pretty good. So as one of the sort of more younger, up and coming guys at the company, he goes to me, Conrad, do you want to, jump ship and maybe work for me? So I did that, and I guess how it all began was we were in an office on Castlereagh Street, and the fund manager and I, or my ex CEO and I, working together. I was working with him on the fund and coming up with strategies and doing some research, speaking to clients. And then it was like, funds take time. Funds take time to grow and build a track record. And so it was just me and him for about 3 months, 6 months in this kind of empty office. And I remember just kind of thinking to myself, you know what, like, you ran a stockbroking firm. I was pretty good at it. We've got an empty office where we spend, a lot of our time doing the fun, but why not manage some clients? And so he said no at the start. He's like, oh, look, that's not what I want to do. And, fair enough. And then eventually, after sort of countless times of me pitching him throughout the day, he's like, all right, Conrad, let's do it. And it started off in a very different way. We initially just went down sort of a research path. But yeah, so that was when I was 23, and then so fast forward about 5-6 years, we're now and we're equities research, and we do that all online, and we cover a broad range of sort of, I guess, strategies and different asset classes. Then you have the advisory or the wealth management division that we offer, which is effectively full service stockbroking, right? Where clients get to speak to an advisor and work out strategies, portfolio management, all that kind of stuff. Corporate finance is a very big part of our business as well. So we recently did, we were recently lead broker for an IPO, which is a pretty big feat for a company our size. And we're just about to launch a fund, starting hopefully, fingers crossed, January 1st. And final piece of the puzzle is we're coming out with an app. So that'll be hopefully by middle of next year.
So Conrad, I mean, through that, it feels like there was a real a through line in a lot of that. It sounded like you, as a young guy, were quite disciplined. You knew what you were after, and you were not shy of taking risks, catching up with people, and throwing yourself with, passion and fury at whatever the task was. It was never, I'm trying to leverage one place or the other. You threw yourself at this, rain, hail, or shine, I'm going to try that. And if you saw another opportunity, you kind of use that and move along. And you've leveraged your talents to grow this thing from the ground up, and it's really impressive. You said that you're going to be starting a fund. What kind of size fund, and what are you looking to do with that?
Yeah. So just on the point of the discipline, I mean, I was always kind of a weird kid. I remember even, like, I say weird in the sense that I had all these really abnormal expectations of what I thought I could do or what I thought people could do. And for example, this is really weird to say on a podcast, but like cross countries, how when we were kids we did, yeah. Um, so I was like partially good to get into the stage where you're not just going against your school, you're versing other schools, right? So in Queensland we called it APS for private schools. And I remember like, and I was probably like 12, 13, and like mumbling to myself like, oh, like this is your fate, like you've got to win this. Like, it's kind of, I was a bit weird like that, and I kind of look back based on what you said, and it's like, yeah, I think I had these like abnormal expectations of what I thought I could achieve, and realistically, it's like to achieve those abnormal expectations where you have to kind of strategize all of that. So, and then have the discipline. But anyways, I just thought that was kind of a weird reflection that I was making whilst you were talking.
It's relevant that you say that. And the reason why is because, a lot of what we do as entrepreneurs and a lot of what we do as humans is based upon what we think we can do, whether we're right or we're wrong. And more often than not, you might be wrong, but when you throw yourself at it, you might learn something along the way. And oftentimes you'll surprise yourself, I don't think that younger you necessarily knew you'd be where you are today. I mean, but you threw yourself at these different endeavors, and it allows yourself to be surprised by what you can actually achieve. So that sometimes blinded faith, it can lead you down some really interesting, fun paths.
Yeah, and lonely paths, but nonetheless, they're exciting. And but on the fund, so we're launching, hopefully, fingers crossed, 1st of January to start a clean calendar year of track record. But when it comes to the analysis, like similar to how when I was a stockbroker, I would really leverage off the people who are smarter than me, and I think that's important, right? People need to understand that some things there are people who are better at some things than you. And especially as an entrepreneur, I think the art of delegating or valuing other people's skill set and time is pretty important. But anyways, we've got a really formidable research team. Our research team is made up of probably some of the smartest guys I've met in my life, let alone career. But they work very, very hard, and what we've decided to do is effectively poach some of our research team, who have some of those core strategies, and then allocate them to the fund. Because we, at least internally, we've got that track record. We can't publish unaudited returns. Our clients know, right? Because they're making the money. But internally, we know that the quality of our research and our strategies is it's consistent, and I think that's the other thing. But we're launching. It's a global long short equities fund. So we'll have a lot of exposure, or give our clients exposure to the US or global markets as a whole. We'll be using a bunch of different financial instruments, good hedging strategies involved, risk management. So we're excited.
And what if I want to talk to you about what you're seeing in the market? Because I mean, it is a funny time. It is a funny time in the market. And what kind of things are you seeing that are relevant for the average investor, or relevant to even you? And how should we be responding to this current sort of economic environment?
Yeah. So I guess there's a lot of variables to it. So firstly, obviously, we're coming out of COVID. Well, at least domestically we are. Here locally we are. And then all of the normalization effects that will happen from that, I think, need to be very carefully implemented or strategized when taking up allocations into the market. For example, there So there are companies that did really well during COVID, and as we come out of lockdown, they will continue to do well because it's almost like this shift in trend or this shift in behavior that's happened. Whereas there are other businesses or industries that historically might have done well in during lockdown and COVID, but they will revert and normalize. And I think investors need to understand what parts of their portfolio are falling into those other buckets, right? Outside of that, we're at extremely elevated levels. That's important to note. But just because something's high doesn't mean it can't go higher. And so, but then also, you've got the concern or the risk of it coming down in a way that wipes out a lot of the returns that we've achieved over the last however many years. And so we're not to give too much away because the audience should just sign up to Maqro, but no,
why not? We're sign up to Maqro.
Yeah, nice little plug in there. No, we are bullish. But we're conservatively bullish, and I think you have to be. You have to be very, like I said, very particular with the sectors and industries you're involved in. Now more than ever, valuations are, something that can't be just, the tech space is one thing. I mean, with the digitization that we're experiencing, even pre-COVID, but it's been accelerated due to COVID. There are companies out there that are popping up which have extremely scalable business models, which is what technology can provide, right? I mean, you would experience this as well, having technology in your business, and we definitely do, and that's why we're coming out with an app where it's like, a company, if they can prove that with one user, their variable cost is this and their, profit margin is X, or let's actually take the profit margin part out for most companies, say it's just their revenue is X, and then they say, okay, well, based on our platform, which is entirely scalable to take on millions of users, right? Well, we can forecast this type of revenue, and it's not crazy in the sense that forecast has been proven justified by certain businesses. But at the same time, you could be very wary of the companies that are sort of jumping on that bandwagon. But yeah, I mean, all of that combined, plus just the political tensions that we're experiencing. Australia's doing a bunch of interesting things. I had a really interesting chat with the former ambassador of Australia to like UAE and Spain and Chile, and I was talking to them about what the hell's going on. The way that Australia's approached its in international relations is quite interesting. I mean, he said he wouldn't have done it that way, given that advice at least. There's a lot of risk, and so both from an anecdotal level and just with the sheer amount of different variables at play with COVID and the different sectors at play, I think investors should be very careful. Again, just because markets are quite frothy or elevated doesn't mean they're necessarily going to, just dump. We were short-term bearish, or we expected that volatility to the downside marginally, and we were in cash for about, most of our clients were about 30%. We've been starting to bid back into the market, and so, but yeah, look, it's very selective companies that we're invested in.
So it does sound like it is quite a complex formula. There's no one true way through all of this. There's no one market. You're kind of looking at it from a very almost piecemeal kind of view. But it largely sounds like you are more bullish than bearish, and you see that there's an optimistic future ahead of us. Have you got any concerns around inflation or interest rates, or do you think that investors should sort of normalize or have a sense around what is a good return these days?
Yeah. Look, investors just need to have the way that we approach everything, whether it is economic indicators like you've mentioned, or whether it's political indicators, or fundamental components or technical indicators. I think you do want to have a systematic core strategy of how you invest. But I think the people who can add that sophistication or the complexity are those people that will have the capacity to actually understand that, the smallest increase or decrease in this factor or that factor does have an effect or have an impact. It's just about how you act on those, different variables. And so, there's a lot to it. Economically, there's a lot to it. Again, we've poured trillions of dollars into the market. So, there's, it's funny when we speak here, it's kind of like, we can have discussions about, okay, what's happening with the property market? It's like, will the government ever let this thing stop? Probably not, right? So there's a lot of things that that we'll have to sort of see come out and then adjust our strategies against. But they are those variable components. The core strategy is, you still have to be able to identify what a good company is, and you still need to have, one of the things that I find really interesting time and time again, is a very fundamental thing that we study in finance in like your first year is portfolio optimization, right? And this is for retail investors. It's kind of bizarre how people just leap to stock picking, right? But your first thing that you learn about how to manage a portfolio or how to invest in finance is that it's all numbers, right? Diversification is numbers. You're not diversified just because you have a stock in this industry compared to, let's say, that industry. You're diversified because the correlation between those two, allow for that diversification or that reduction in volatility. And so that's all numbers. And, I think basically what I'm trying to say is there are so many basic fundamental things that investors are not doing. I think getting caught up in this, in the minor adjustments they're making to interest rates or inflation or the forecasts they're making based on, how, Frydenberg or how these people are looking into the camera, you're really just you're gonna get really, really sort of overwhelmed with everything. But if you have that solid foundation of how you're investing and what the strategy is, again, that gives you the capacity to take those intricacies into consideration. So, look, I mean, like I said, we're bullish until we're not. But we're a lot more conservative in the companies that we identify, and also the attention that we put towards portfolio management. What sectors that we're overweight and underweight in. This is adjusted, quite regularly. And so, I think investors should be on the pulse to respond and react and reallocate their capital to other sectors in business or even in cash, right, when they need to. And I think that's a big takeaway for me anyway.
If I'm listening to you carefully, the thing that sounds the through line in all of that is don't get caught up in any one economic indicator or policy decision. Like certainly pay attention and respond, but you need to really be paying attention to the fundamentals of that specific investment, whether it's a company or a property. There are specific things that impact that business or impact that property that's going to make it a good investment. So to sum it all up, what's the one thing that you could recommend to people that they do today to build a wealthier life? What's the 1% wealth hack that you've got for our audience?
Okay. So wealth as in financially, I suppose.
Whatever definition you're going to give to it as well, really.
Yeah. I mean, my definition of wealth has changed considerably since I think that happens for a kid who's 23 and starts a financial services company. Like things change in your head.
It goes from a chandelier in a nice house in Singapore to, whatever it is today.
And I think like everyone is wired differently, I suppose. And I find that a lot of people, they'll lump wealth into things like success or happiness and things like that. But the first and foremost thing for me would be that to define wealth, you'd be, well, for me, I guess objectively, it's pretty easy. Like you could put a, you could run a ratio on assets to liabilities, and that spits out some freedom figure. But I think subjectively for me, it would be more so. Wealth is definitely a thing to achieve, right? So, and it used to be everything. You used to be something much more personal to me, that I associated things like happiness to. Whether it was for my family, or the family that I wanted to have. And over the course of the several years I've been on this planet, I think I've come to the realization now that it is more so just something to get out of the way. Some people refer it to as freedom, and so that's kind of in line with, I guess, what I'm saying. But to be able to enjoy your life and take on the next part of your life, sometimes people need to achieve certain things. And for me, it just so happened that wealth was one of those key things that was ingrained to me as a child, or as a student, and then as a uni student, and over time was all that was around me. But yeah, it's very different. I don't know if that's defined it at all, but I guess my 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 expectation for myself, again, it might be a little bit warped because of the opportunities that I so fortunately do get to have as running a pretty exciting startup in the financial services space, right? I mean, if there was ever any industry and company that was had a probability to create a lot of wealth, it's probably in something like Wealthi or Maqro, right? Outside of, let's say, Elon Musk-esque type tech startups. But for the things that to unlock that, or to hack that, as you say, like, firstly, you just have to have a strategy. God damn, I think a lot of people just don't understand that there are people who are way smarter than you, who work way harder than you, and even these people don't get there, right? For whatever definition of wealth, whether that be something, let's say you call it having your own property, or let's say you call it hundreds of millions of dollars, or let's say it's a big $1 billion, right? Like, at every component of those tiers, there are very smart people who work very, very hard, and sometimes life just does not fall the way you want it to. And I've seen that firsthand. I've seen that from other people. I've heard stories. Heck, there's movies about it. And so I think what's really important is to have a strategy that actually makes sense. And for me, what was the most difficult part about being on what I think is a pretty accelerated fast lane to unlocking my personal definition of wealth, it took me probably a lot of time to get on the path itself. So if you think about it, it's like there's one path here if you want to be, I don't know, a professional sports athlete. Then you've got a doctor, and then maybe there's a lawyer, right? Which is what I wanted to do at one point. And then you've got, let's say, financial services, entrepreneurialism, right? Whatever that means. So, but it's like, whatever those final outcomes are, getting onto the path where all you have to do is work hard, and like that's it, is pretty difficult. And you can work really, really hard going down a path that you might think is getting you there, and it might not be perfect, right? And it never will be. But even if you are 1 degree off, you'll end up being somewhere completely different. And I think having the greed or the ambition for yourself to not want to work towards something unless it's on the path that you want to get to is crucial. Because one, again, you're going to have to work hard, and it's really hard, right? I think a lot of people underestimate what it takes to run a company or start a company. I know I did. I know when I was a child, I thought it was easy. And I used to see my old man, and he would be, chain smoking cigarettes, right? He had his wild ups and downs. And so, it's not like I came from this like fortunate background. contrary to, the popular stereotype of Asian parents. But I was, always kind of seeing the darker side of running a business, which is, it can impact the family negatively. It can impact health negatively. And, there's a lot of sacrifice to it. And all of those trials and tribulations. So, for example, the biggest trial and tribulation that I think I've faced in the recent years is that people are not who they say they are, right? There was a major shareholder of mine, is a dear friend of mine. He's in his he's quite old. He won't like me telling everyone how old he is, but he's a very intelligent and he's from wealth. He's from wealth, but he's accumulated a lot of wealth using that wealth. And so we talk about a lot of things. And we went out to dinner one time, and he said to me, Conrad, it's very lonely. It's a very lonely road. And around that time, I was going through situations where whether it was friends or business associates or even just anyone around me, it almost felt like, and this is going to sound very, this is the darker side, which the language is not that nice, but it almost felt like piranhas snipping at your ankles. Everyone wants a piece of you, right? Heck, you raise some money, and then all of a sudden you're a gold mine to these people. Or people who work for you for many years, and you establish this relationship, end up just if it ever does come to an end, they were just employees, as much as you didn't feel that way, right? And it's a reality check. A reality check, like everyone's trying to pitch something, and that's normal. Heck, I wake up and I'm on my phone, I'm getting pitched 100 things a day, right? I walk out into the street and there's signs everywhere and people coming up, and I go into work and it's the same thing over and over again. And so I would say all of those difficulties that might not even be from a business point of view, right? Running a business has its own challenges, but then you've got the personal side. And if you don't have like a clear path and a strategy, it's going to be hard enough to try to work really hard and get through all of that. Imagine doing all of that and it's going towards something that it's not really where you want it to go. And so I would say for people who are trying to unlock wealth, whether it be entrepreneurial or whether it be through the accumulation of savings and investments and assets, whatever that definition is to them, it's like just work it out. I think it's no surprise that not everyone can be wealthy, right? Statistically speaking, like it's not a problem. It's not, that can't happen, right? I mean, if you want to, it's like not everyone can be the 1%, right? So then the question begs, well, why not? And there's a couple of factors I think that attribute to that. One is, you have to have above normal intelligence, and if you don't, you better speak to people who do. I spoke to a lot of people. As you can appreciate, and Dominic, you've probably experienced this as well, but finance is a bit of an old man's game, right? And I remember being in the first meetings when I was establishing these companies, speaking to third parties, and I'd often get, "Oh, Conrad, you're a little young for this, don't you think?" And over some time, I realized that the right response is, John, maybe you're a little too old for it. Anyways, but I was speaking to a lot of people with a lot of experience to find out what the right strategy was. And if you don't, it's just like investing. If you don't do that, you've got no hope. You're just going to be throwing darts at a random board, trying to pick a stock, or trying to make it big with, I don't know, some social media play or some e-commerce store, or I don't know, you want to set up a YouTube channel and that's just going to have overnight for some reason you're going to go viral, and it's like it's never that simple. So yeah, I would say if you're not above intelligence, normal intelligence, be honest with yourself, and then ask the people, get the advice, work out that strategy, and just hope to God you've got some grit, because there's going to be a lot. And look, I expect and suspect that over the next 5, 10, 20 years it'll get even harder, and I think that's probably the only attitude you can have, because otherwise you're going to get you're going to get screwed along the way. So
that makes sense. So really, I mean, to simplify it, or it really now sounds like you need to have some grit. You need to have some self-awareness to understand what your skills are, where your strengths and where your weaknesses are. Surround yourself with people that are more intelligent or more capable in areas that you're not, and make sure that you're setting the right strategy. Because when you got the grit, the right strategy and people, it's still not guaranteed, but if you work at it, maybe you'll get there.
yeah, that's it.
Bit grim, but it is the truth. So
that's it.
it's good though. You want to hear the grim truth. Now, and this leads us to the last part, and it's called lean on the network. Now, this is more or less how can you help us, and how can we help you? It can be related to business. It can be buying a new car, fitting out your office, finding a girlfriend. I don't know, whatever it is, or partner.
I'll take you up on that last one. I don't even want to go into my love life. That's a whole episode. So I think we could help by I guess providing some some down to earth comprehension and insights into not just what to invest in, but how to view the market and how to view your portfolio and the investment strategy that you have. I think the service that Maqro offers is very, very much about being. We do not claim to have a crystal ball. Heck, if we did, we'd be locked up by ASIC. But we're of the belief that we just work really, really hard to do the best we can, just like any other service provider out there. Now, sure, if you work the same amount of time and hours as us, you might get better returns than us. But what we do is we work our asses off. Whatever you need, we'll get it, whether it be analysis on this or analysis on that, objective advice, whether it's a hard talk about, snapping a client into shape and saying, hey, look, like you keep making the same mistake, right? And we keep being upset about it, but you keep making that call. So, something's going to change. And so we're very much happy to try to provide a support service to any investors, potential investors, people who are struggling, people who are concerned with where the markets are. And we'd love to provide sort of a complimentary strategy session where just let us know that you came from the Wealthi podcast, and we'll book you in with an advisor or one of our research analysts, and just give you the sort of no BS rundown of what we do and how we do things.
It's very generous, and I want to just add to that. One thing that I've noticed is talking to you and watching a lot of your content and videos is what I believe our clients and our viewers and listeners will get out of sitting with your team is, even if you're talking tips or talking stock, it's about how you've come to making the decisions that you are making. That is the valuable lesson in all of that, not just what the tip is. It feels like you're teaching us how to fish.
That's it. People are, and that's why I did so well, I think, when I first started out in stockbroking, because people didn't care about what the actual stock was. They wanted to know why we thought that was good, because then they can rely on the fact that the next recommendations or the next piece of advice have some core fundamental value. But definitely, we've got some really smart guys as well. Right across here is Mark Gardner, who is the ex-chairman of Genesis Prop Trading. He started Allium Trading. He's been trading private funds for decades. We've got Rob Paulette, who's the CEO. He's ex-Westpac derivatives. Just an absolute. He's kind of like Rain Man, like quite literally. But been in the industry and seen it all. And we've got a bunch of just really hardworking advisors and analysts, and we'd be more than happy to speak to anyone.
And how can we help you? What do you want from your network? I mean, whatever part of the business, or maybe personally, or whatever it is. Like, where there's a lot of people that are watching, listening, paying attention. Maybe we can reach out and help you
help me. Look, we're coming out with a pretty exciting product. So we're coming out with a mobile application that, just Okay, so I'll plug in this one thing. Look, we are coming out with low-cost brokerage. It's going to be starting at $5 a trade and we'll scale up. But like this zero brokerage, this $5 flat brokerage stuff, it's like cheap brokerage is not how you're going to make money in the markets, right? You're going to save $5 or whatever the brokerage rate is. What we're doing is we're coming out with an app which does have that low cost brokerage functionality, because the race to zero is real, and I'm feeling that. But the app is going to be very powerful in the research and the portfolio management and the execution side of the stock market. And so we're coming out with that. And so, I mean, we'd love to have anyone who'd be interested in trialing or being that, that test group. Yeah, we'd love to have you guys sample out the product as we're sort of finding the bugs and getting it ready for market. Yeah, if you have any introductions to some pretty ladies, that'd be that'd be good too.
Right.
No, I'm just joking.
So we've heard it here. So anyone that is interested in trying out Conrad's new app, reach out, let us know, put it in the comments. We'll certainly put you all in touch. Pretty ladies that like what Conrad has had to say, reach out on LinkedIn. And mate, thank you very much for your time today, for sharing your story. There's certainly a lot in there. We probably could have sat for another hour or two, but this isn't the Joe Rogan podcast today.
Yeah.
I'll come and say, hey, next time I'm in the city. And yeah, thank you for your time. Any of you out there have questions for Conrad, let us know. If you disagree with some of his comments, great. We'll happily take up the fight in the YouTube comments. And mate, thank you very much. And I'll see you all soon.
Awesome. Thanks for having me.